Before we even start the video, I'm going to break your heart. The goal is not to get rich quick, it's to get consistent over time and ultimately do this full time and make a career out of what I'm about to tell you right now. This guide is not going to be a lot of fun. It's going to be boring, but it's going to teach you everything that you need to know and how to visualize the market so you can get started immediately going into every single trading session, whether it's futures, options, or whatever it may be. Let's get to work. Now, I promise the video is not going to be this boring, but we have to ask ourselves the hard questions before we can really do anything. So before we go into strategy, indicators, everything to look at with the charts, you have to ask yourself and be honest, who exactly are you? So if you're trying to scalp, do you have the time? Can you be locked in throughout the day? Can you be locked into the entire time you're inside of a trade? And I really think for the most part, scalping, day trading, swing trading, you need to be pretty vigilant of what you're looking at. Now, if you're a long-term trader, buying, holding, forgetting, then you don't have to be that locked into your trade. You just got to have a good viewpoint of what you like, be okay owning that stock, and that's it. But with scalping, there's a lot of other things that people don't really talk about. And I'm not going to lie to you and saying if you have a 9-to-5 job and you have to be totally locked in and you can't be watching something else, then this is a great idea for you, because it's not. Anyone that tells you that is a liar. You have to be able to watch what you're doing, understanding what's happening, especially right now more than ever. We have a president who says anything and everything that he wants. The markets are more volatile than we've seen them in the past 3 years, most likely. And again, things are just changing consistently. So you have to be honest with yourself when we're going over this before we can do anything else. So if you are someone that's able to watch the charts when you're trading, even if it's for 2 hours a day, you have to be able to tell yourself, like, that's what I can do. That's what I can dedicate to myself, dedicate and tell myself I can be honest with myself that I'm going to do every single day, whether it's 8 a.m. to 10 a.m., power hour, whatever it may be. That's what you have to be able to tell yourself. And we're going to go over everything else, but be honest with yourself at this part, because if you're not, you're wasting your time, because you will lose money if you say, okay, I'm going to do this, and you get a trade and you leave and you just hope things play out. You're probably going to continue to lose a lot of money. So let's get into strategy. Let's get into our indicators. We have to talk about this first. So it's important that we understand who exactly we are and what are our goals, because I can't really go over anything if you don't understand and you're not honest with exactly who you are to yourself. Meaning, if you have a 9-to-5 job, you probably shouldn't be scalping stocks throughout the day because it doesn't have your full attention. And anyone that tells you you can do a strategy that's really simple, get in and out in 30 minutes, that's not true every single day. And chances are, if you're doing this, you're, number one, going to want to be locked in every single day and have something that's easy to practice and easy to apply for your lifestyle every single day as well. So again, that's how we're viewing this to start, is understanding who you are and what's obtainable with your goals right now. And it's important that we're setting goals from the beginning, whether it's making $100 or making $1,000. That has to be our goal short term, is to continually have standards for ourselves. Once we understand that, we can jump into indicators, the strategy, and then executing this. So let's continue. Now, for the sake of the video, I'm using TradingView. And if you're a beginner, honestly, I recommend using whatever broker that you're using, whether it be Thinkorswim, Moomoo, I don't care. I would use your broker over any other platform, just so you're familiar and you're in one spot. You don't have to go to a bunch of different platforms. It makes things a lot easier. I just use TradingView since I was literally like 17 years old. Now I'm going on 28. So it's just what I've used for over 10 years now. So when we look at what's happening, I'm going to use SPY as just an example for a lot of this. But what we're going to do first is indicators and going over exactly what they do, what they're used for. And I have a lot of other videos on the channel going over them as well. But here, just going to be a breakdown of everything. So number one, I'm going to start off with the short-term indicators, and then I'll go into long-term indicators as well. So for short-term, we're going to use two. And again, you can just quickly get these on your chart. We're going to use VWAP. And for some reason on TradingView, I hate that it does this, but I have to go in here and I have to double click it. And then we're going to go and change a few things as well. I do not want any of the bands or anything like that. So I just want to see the VWAP line. I make mine a little bit thicker. And that's what mine looks like. That is it. I don't change anything else. It's your standard VWAP. And it should basically stay the same for every time frame as well. It might change by a few cents, but that doesn't really matter. Now, VWAP, what is this used for? Again, I have deep dive breakdowns on my channel you can look at as well. But what I will say is this is really good for understanding the daily overall trend of what's happening and where buyers and sellers are getting involved. So for the purpose of this, I'm just going to use the highlight of Friday's market open, and you can actually see what's happening here. Now, let me break this down. It's basically a real-time indicator. A lot of indicators you see like MACD and RSI are lagging indicators off of old data. VWAP is updated in real time based on volume traded on the stock or ETF, whatever you're looking at. So when you see this, typically in the beginning of the day, VWAP is a little less useful, but after like the first 30 minutes, it's usually pretty good because it has more data to track on. So what you really want to see and what you will normally see is closer to VWAP, you'll get more volume traded on the specific equity or whatever you're looking to do. So what you look for typically is you break down, you might get a retest, volume will pick back up, buyers or sellers will get more active, you'll reject and continue down. So you use this almost as a continuation in understanding the bias on the day. So when I see us trending underneath the VWAP on whatever I'm looking at, whether it be Apple stock or SPY, then I typically want to trade the downside. Why? Because the underlying trend for that day, and this is short term, is bearish, right? So again, we want to stay on the side of the trend and keeping the trade in our favor. So again, as we're trending below, that's what we want to see. Now there's our examples, right? So we can go to an example of Thursday, right? To where you hold below, right? As you can see here, that's your market open. You stay below. You have a few trades where you reject off of VWAP. You kind of get there again, and then you kind of base on it, and then you kind of ignore it for the rest of the day and stay on top, and trend kind of flips, right? So it's important that you're watching what's happening throughout the day for scalps, whatever you may be looking for, and you can see you flip above it, you test, you pop back up, you make new highs on the day. So again, overall, you can use it a lot. Now, when you have days like this, right, to where you're going back and forth through it, this is a day where it's just bad action and you do not want to focus on trading. So again, you have great instances there of terrible action, a reversal, continuation, right? VWAP, probably one of the best indicators you can use. I don't care what anyone says, especially if you're a day trader. Number two, I use the EMA, and this is the only EMA I use, and it's for day trading. That is it. I do not care about any other long-term EMA. So we're going to type in EMA. We're going to go to our settings, double-click it. We'll change it. I always change mine to red. You can use the same color scheme that I use. So if you watch my videos, you know what you're looking at. So I go in here. It's the 9 EMA. It's always the 9 EMA. It's just set it on our chart. That's what we care about. That is it. It's not the 21, not all these other ones. The 21 is okay. I've used it a few times, but that's more for futures. I use the 9 more for equities and clear continuation. So a good example of the 9 EMA. What do we use this for? Again, lots of deep dives on the channel as well here. When you're looking at the 9 EMA, you're using this for quick continuation. What does that mean? So let's say we're looking at a trade here on SPY, and what ultimately we're looking for is a retest of VWAP to look to go short. So if I'm looking to go short off of VWAP, let's say I have stops here, I'm going to move stops up above this little local high right there. And then ultimately I'm aiming for that low right here at 605.75, right? The low of the day that you previously had. Well, the 9 EMA helps us out a lot. Why? So you get there, you get below the 9 EMA, and when you're below the 9 EMA, it's all for continuation on the 5-minute time frame. That's what I primarily use it for. So as long as you're staying below the 9 EMA, you're looking for continuation. So even though this was my target, let's say I cut half my position at my take profit there, but I still could have righties and leave runners as long as we're staying below the 9 EMA. And what you're looking for is a 5-minute candle close above, at least 1 to 2 above, right there at the end of the day. And that's the only signal you would have had to exit a SPY position for the remainder of the day. You would have got an additional whole $6 of downside, right? This is just a perfect example. But again, you can use this time and time again as well if that's what you're looking for also. So again, the 9 EMA for continuation. You can go to past cases as well, where like you grind back above, you get above VWAP, you have 1 close, but you can't get to 2 candle close like we mentioned, and you grind back into highs until the end of the day as well there as well. So again, tons of examples. We have a lot of deep dives here on the channel, but just for a quick example of what we're looking for here, the 9 EMA and VWAP are your short-term indicators. Now, I will say there are some good ones as well, and this is going to be a little bit of a tougher one, but this is volume. Now, you can use just a normal volume indicator. It doesn't matter, okay? I have a custom one that was developed for me from Lux Algo. It does cost money, so I'm not trying to sell this to you guys, but if you're a beginner, I would just use a normal volume. The Lux Algo one just shows you buyers versus sellers, which I really like. There's a lot of free versions of this out there as well that you can find, but again, this was just custom built for me. And again, you use volume for continuation of what you're looking for. So a good rule of thumb with volume, you don't need to see high volume when you're just moving in a direction. So if we're just continuing down here all day, I don't necessarily need to see a spike of volume to say that we're going to keep going down. But what I prefer to see is if you're like here, reversing, making a bear flag here, right? I want to see a surge of volume when we break back down. And so what you can see here is volume is declining right here. Volume surges right here, and it keeps ticking up as we break down, signifying the breakdown, and sellers are still strong there as well. It is worth mentioning that volume is always going to be higher in the beginning and the end of the day. It just always will be higher, just to let you know. So again, if you see surges there, that's just normal. I would always expect that. Nothing crazy, nothing out of the ordinary there as well. So again, what we're looking for, how I'm looking for every time I'm looking at the charts, just so you can see that as well. So those are the short-term indicators. Volume will also play a long-term as well, but we'll go more to that here in a second. Now, long-term indicators of what we're looking for there, okay? I want to be very clear. These are not primarily used for short-term trading, or you can use them, but they won't be as relevant and you won't see them as often, okay? So let's go over. Now, what you're going to use are going to be your SMA. So when you're on TradingView, it's simple moving average. When you're on a broker, it might just be moving average. It doesn't matter, okay? It's not smooth, it's simple, right? Because it just wants to be a regular moving average, okay? Now I'm gonna bring up 4 of these, okay? Just really quickly so you understand. They're going to be 2 of the same technically, okay? What we're going to do is we're going to go 200 on one of them and then 100 on the other. And you're going to repeat this for the other ones as well. So what we're going to do, and I'll give you the same color scheme that I use. We're going to go to our time frame here, and we want these to always be set to the specific time frame. One, we're going to set these to the daily. So the one set of 200 and 100 will be set to the daily time frame as well here. And then we're going to change that color scheme just to give you a viewpoint. I always use yellow and green as my 200 and 100. And I will tell you right now, I don't always leave these up, especially my weeklies. I usually take a quick look, so I have a viewpoint of what I should be looking for, and that's about it. And so I'm going to go into these other ones here in a second. Okay, so what are these used for? I'm going to quickly hide my 9 EMA and the VWAP. Okay, so again, we're going to go to like the 4-hour time frame here as well, so we can quickly see your 200, your 100 is your yellow, your 200 is your green. Okay, these are high set moving averages. Hedge funds use these, okay? They're literally market breadth is based off the 200 moving average, basically, okay? Now, you can see the SPY occasionally, this is a high time frame. So literally over the past year, going back all of 2024, okay, we'll say 2024 starts right here, just to give you a viewpoint so you can see right here, Jane, about right there. You've tested the yellow line, your 100-day moving average once, twice, 3, 4, roughly 4 times you've touched that level. Now, a few times you come below it, but ultimately when you get back over it, it's been a clear buying opportunity. You have not tested your 200 daily moving average there. Now, a stock example, the NVIDIA is a great example here. NVIDIA rarely touches its 200 daily moving average. You broke above it back here in 2023 of January, and you just tested it for your first time and actually got back to it back here at the end of January with all that DeepSeek FUD that you had, right? That being said, these are major supports and they're trend changers. What does that mean? So going and looking at something like SPY, for example, when we got really bearish on the market back in 2022, well, look what happened here. When you flipped your 100 and then your 200 here, when you really lost it, you broke, retested, lost right there. You were bearish and you stayed below it for an entire year, basically. You were in a bear structure. You were in a recession, dare I say, right? On the S&P, clearly breaking down. And again, you can see this happens very rarely does it flip the underlying trend. So if it were to flip the 200 here at 568, it'd be very bearish. So again, you want to use these to understand what's happening with the underlying trend. And something I'll talk about in this video is understanding the long-term bias. Even if you're a scalper, right? Even if you're a short-term trader, it's important to understand the long-term bias of the market and understanding where these key levels are so you don't get stuck in a position and you don't just assume you're going to keep free falling, but you know there's support, you know things are changing, and there's important pivot points you have to be watching. Okay, now there's other levels. Again, you might have guessed it. Again, we're going 200 right here. We're going to go to the 1 week. Okay, it's going to be the 1 week time frame. Again, I usually use the same color scheme. People may disagree. I don't care. Do whatever you want. Okay, so that's going to be your 200. And you're also going to come here and we're going to set this one to yellow. And we're going to change this to your 100. And these are going to be on a 1 week time frame. Again, same overall scheme. But what I will say, the higher the time frame, the more important the indicator, the more important the support. Okay, this is very important to understand. When you are in a higher time frame, no matter what, it is more important. Now, these are tested way less often, right? So this is very important to understand. So let's use AMD as an example here, okay? AMD has been in a very weak downtrend, right? Just clearly breaking down here, right? As you can see. Well, something interesting that's happened over the past week is everyone's been talking about buying AMD, but look where you're rejecting at. I believe this is your 200. Yeah, your 200 weekly moving average. 1, 2, 3, 4, 5 rejections on a 4-hour time frame, and then a very strong reaction. It's a massive level. So some people were calling for a breakout because you broke below those previous lows you had set at 414. But if you go to the higher time frames, you look at the key levels here, you understood nothing had really changed and you were still in the downtrend. So it's important to understand. Now, again, you're not going to use these levels often, but it's important that you're refreshing your memory. And if you have a few stocks that you're looking to trade, that you know where these levels are, because again, they can change everything and they could really set you up for either a big win or a big loss. And if you understand where these levels are, you'll never really be fooled into thinking of a fake out or things along those lines as well. Because when these levels are reclaimed, and you can see you held this level for a long time at 115 to 116, you did not want to break and eventually you lost it, right? So important to understand, important to watch. Hopefully you put these on your chart so you understand what to look for. Now, even though I'm breaking this up into short and long-term indicators, short and long-term strategies, I want this to be very clear. Even if you're a short-term trader, you need to have a long-term mentality and a long-term understanding of what's happening in the market. Because if you can't understand the long-term viewpoint, then trading in the short term might become more difficult and you might get actually lost with the opportunities that are right in front of you and finding the best opportunities overall in the market. So we can't just have a one-track mind when it comes to investing or comes to trading. And this leads straight back into the strategy that we're going to cover now. Okay, so now we dive deeper into strategy of what we're looking for. So I'm going to start with short term. When it comes to short-term trading, this doesn't mean swing trading or anything like that. When it just comes to scalping, getting in and out of trades, making my money throughout the day, I'm a reactive trader. So let me explain what that means. Let me just draw it out so you can see. So let's hypothetically say we have a key level up here. This is a resistance, and then this is a support down here, okay? What I really love to do at the root of my trading is I love to wait until we reach these levels here or here. Now, there are opportunities where you might range here and then slowly break and then range here and then slowly break. Some people love trading those little ranges. I will say when you trade these little ranges, you make less money. Now, some people are fine making that, but I will also say you're more susceptible to being stopped out, wicked out, fooled, etc. And I don't really love doing that. So what I love doing is waiting until these big levels get tested. So that means we go down, we pop up, we push down, and we ultimately come here, then we pop back up or whatever we may expect. But the reason is because at these levels, we know buyers and sellers are active. We get good moves, we get fast moves, we get aggressive moves, and that's how we make our money. Even if it's short term, I don't care. Short term, long term, this is basically the viewpoint of how I trade. So as we dive in here and as we look at this, we look at SPY for more of an example here. So really quick, I'm going to get rid of the indicator so you can see. Before every trading session, I will come in and I will identify my levels of what I'm looking for and why I'm looking for them. Now, I have tons of videos going over more in depth about how I do this, how I find these levels, things along those lines. I also have a Discord, which is down below, where I do this every single day. So if you're interested, check it out. I never want people to feel pressure to pay for anything, but I do this every single day going over levels, what I'm looking for, and I basically draw up the roadmap for stocks, equities I'm looking for trading every single day. Me and my partner, Jordan, have a watch list, everything along those lines, trade setups, ideas we're looking for all throughout the day. Again, good community. So if you're interested, the link is down below. But going back into this, let's jump right into what we're looking for. So very quickly, what I typically do is mark out previous highs and massive levels established there. And for the sake of the video, I'm just going to knock this out as quick as possible so you can see previous big levels that we've had, previous supports as well. So really quickly, let's just mark out a few so you can see where they are and where they were at more relative to where we were. So quickly marking these out, you can see those are the ones that we're looking for, and then we'll break down to the 5-minute time frame. Now, I will say I always have a top-down approach of what I'm looking for. What does that mean? Higher time frames to smaller time frames. I'll look at and find my levels on the daily, the weekly, and the 4-hour time frame, And then when I'm executing my trades, it will all be on the 5-minute or maybe even the 1-minute, depending on what I'm looking for and what I'm trading. So really quickly, and a good rule of thumb is marking out previous day highs and previous day lows, which I made a video on last week as well. So as you can see, these are our levels that we have marked out. You can also see we had a previous low here as well. And you had our previous lows here from Thursday as well. So we can see a previous low right there. And this is actually going to be a very good rule of thumb of what we're looking for. So Friday as an example. So we come out Thursday, as you can see here, and we make a level around this area right now, right? Now, again, you come out Friday morning and you're obviously bearish. You can see that we're clearly opened up at highs and you just see nothing but selling since open. Now, some people might want to get aggressive. Some people might want to start opening entries, getting in there. We have our 9 EMA, we have our VWAP, you're below this. But I don't like buying when you're just going down. I like to buy on a retest so I can get a better entry and hopefully have more security in my position as well. So we never get a retest of our 609 level. So again, I have to wait even further. So our previous low in the day was right here around 607. So what you can see happens here is you actually break down through that level quickly, and then you retest back above it. But you have a few things that really interest you here. You have your VWAP, which you're coming into. You're coming into that 607 level as well. So what I would do here is I would start scaling into a position near that 607 level, maybe a little bit higher, wherever it may be. And I'm gonna have my stops above whatever candle is above that VWAP, which is right there as well. And that's what you're looking for. Back down into ultimately lows or whatever your key level may be, which was for us around the 605 level. Now, what gets better here is you use the 9 EMA to get that clear trend as well for continuation and leaving runners throughout the day also. This is just a very, very quick example. Now, a more detailed example, and I'll use an example that we used on Friday in previous sessions as well of going into the market. So again, every morning I try to go over futures. Futures are the best way to understand what's happening, whether you're trading SPY or Qs. You want to understand what's actually happening with the NASDAQ and ES. But looking at what's happening with NASDAQ, so we come out quickly here in the morning. Let's see the exact thing right here, 8:38. Let's go to our marker. So this is at 8:05, 20 minutes before market open, right? Highlight here. So we had our levels marked out. So what we were looking for, NASDAQ coming back into our key level of 22.25, holding VWAP currently. If we get NVIDIA over 140.7, because he semis carried to the upside. Under VWAP, we're looking for back down towards 22.100, so around a 100-point drop. So going into NASDAQ, giving you just, again, a complete real example of what we did and what we looked at going into Friday morning before market open. So again, key level right here around 22.50 locally. And that's where we were opening up in the pre-market. We said if we break down, we're looking towards 22.1, which again was pretty conservative to say the least. And if we broke above this level here, we were looking for a high push into these highs back here, which was ultimately like around right there, 22.3 locally. So again, this was a quick example of what we were looking for there. So again, we called that out around 8 a.m., which was right around right here when you were currently rejecting. Market opens up around right here. You can actually see we start pushing down. Now, again, let's go back to exactly what we said. Under VWAP, we're looking to go back into 22.110. So what happens here? You start pushing, and we have to go to a smaller time frame because you get a little bit aggressive here. But you can actually see what happens. You get below our level, quickly identified. Number one, the VWAP. You break below, you retest, and you push straight down into our target there on the NASDAQ. Again, a perfect futures trade, break, retest, and over 50 to 60 points of downside within 2 minutes, as you can see here. Again, this is a 1 minute time frame. So from 22.17 down to 22.110. And then you ultimately, if you go to the 5 minute, you stay below VWAP and you end up just dying back to the downside, ultimately for a better part of the day, as you can see as well. So really what we were looking for, identifying in the market and what made sense for us and how we traded it. So again, short term versus long term, what you're looking for there as well. Now, long term, what are we looking for? It's less reactive in the form of a small time frame. What we're really looking for on long-term trades, swing trades, is finding opportunity. Now, what I will say, I'll use NVIDIA as an example, and I'll use a few others. Now, NVIDIA, you're closer to your 200 dailies, you're not really close to your weeklies. So when we started getting below your 200 or your 200 daily down here, I knew this was a big opportunity because we hadn't tested this since 2023. And it was unlikely we would break it on our first try if we used history as an example. So you can also see You get below this, but once you start remounting it here, this was a major, major buying opportunity. And then you even mounted those highs you developed there as well at 129. So you have to be clear in understanding where you're finding resistance. And this, again, is like a 2-hour time frame. But you can see that this goes back to basically January 27th. And when we started buying it was right here around February 7th. So again, almost a 2-week time span of this trade to develop. Once you get above this, you start targeting back into 140.7. Now, why were we targeting that? You go to your daily time frame. It was your previous all-time high established back in June, and then you made new all-time highs around 143. So we knew that level would be key based off of that as well. And you look at the daily time frame, you mount that level, break, retest, continuation. So you had multiple opportunities. Once you broke, you retested, like we talked about, getting that reaction. The reactions play out, but again, they're on higher time frames, not the smaller ones. So again, it's just expanding on what we're already doing. Another big example here, Apple. Apple was finding a lot of weakness. It came down to your 200 daily moving average. We knew this was going to become a buying opportunity. We wanted to see the reaction. Once we saw volume uptick from those lows, and you can actually see right here, you're seeing volume you get peaks, but you kind of stall. You were sitting at a local 47, 48 million. But we saw volume start to really peak higher here, signifying that buyers were getting more aggressive down there at the lows and near the 200. And again, it was an immediate buying opportunity. You bounced, you came down again, bounced again, making higher lows as well. So it's being able to identify the reactions that are happening there, the volume, and piecing it all together. But again, there's no crazy indicators. There's no crazy signals. It's using the information you already know on short-term analysis and translating into long-form analysis as well. Now, it's also important to understand, am I looking to go long on the market if I understand that the SPY and the NASDAQ are weak? No, I wouldn't want to do that. But I'm also identifying that the NASDAQ is holding your major levels, your 100-day moving average as well. And that's what's setting this all up, because I have a viewpoint of what's happening overall with the market. And then I know the largest names out there that are finding the best opportunities as well. It's being able to combine both and execute them every single day. Now, again, when we're going over long and short-term strategy as well, we still have to understand the trend in which we're trading in. We still have to understand what's happening behind the scenes in the market before we can even go into a short-term reactive type method and reactive type trading. But it's still very important that we're able to identify the differences, because a short-term trade might only be a day, whereas a long-term trade, we want to capitalize on the opportunity and the vision that we're seeing inside the market and the opportunity that's presenting itself. So when we see big dips over the course of a 2-3 day period, this is a longer-term mentality of what we have to look at. When we're seeing those dips in the shorter term, it's obviously making opportunity off of those options that you may have in front of you, but then also being able to capitalize and understand the long-term mentality of where those buyers are showing up and what you expect from those buyers as well to maybe see more short-term continuation or a long-term trend change. Now, when it comes to executing and what you want to trade, this is the biggest thing I see people ask me. Should I trade options? Should I trade futures? What should I do? If you're just trying to scalp every single day, get in and out, make a quick buck and be done, I personally think futures are your better option. And I think funded futures make the most sense. My link is down below. You can use my code to get a discount. But anyways, I use my funded futures. I use Top Step and a few other brokers. I think my funded futures makes the most sense if you're just beginning, because you can have 3 accounts with them. And again, it's the most affordable option, and they're really legit as well. I know the founder. I know everything about them. I've never seen an issue with them. So that's what I would recommend if I was just getting started with trading futures and I wanted to have the least risk possible. I have a lot of videos going over funded trading as well, so you can go into those also. Now, if I wanted to get into trading stocks, where I wanted to do a mix of both, like swing trading, day trading, everything like that, and really use more of a fundamental viewpoint to what I was looking at about finding those opportunities and maybe finding bigger wins, right? I would use options. Now, when you're using options, who I use personally is Moo. This is not a sponsored video or anything by them. This is just who I use and who I'm affiliated with and who I've used for the past year or two now. Again, I think they're very user-friendly. They're a real-time traded stock as well, and you can use them. The link will be somewhere down below as well. Do whatever you want. This is who I personally use. But I want to make something very clear. The goal is to not get rich quick. That is not my goal. That is not what I'm trying to preach here. That's not what I'm trying to teach. The goal is to have a consistent strategy that works. You understand how you're making money, and hopefully you can repeat that strategy time and time again. Now, you will lose. You will have a losing trade. It's going to happen. I lose all the time. I post about it all the time. However, it's understanding how to continue to win despite losses, how to manage your risk, and what to do in the market. Now, at the end of the day, I can teach you everything. I can teach you exactly what I know. I can go over everything that I'm looking at on the screen. But I will say one defining factor. It's screen time. As much time as you can spend practicing, as much time as you can seem familiarizing yourself with the screen, familiarizing yourself with the charts, what's happening in the market, you'll understand these things a lot quicker over time. But what I will say is it comes to the point where you have to start putting the practice to work. And so when I'm going over all this, it's important that you understand what's exactly applying to you and what you want to do with what I said in the beginning of who you are and what your goals are. So as we start to execute these things and go over these, it's important that you're honest with yourself throughout the whole entire process. Because again, as you exercise and actually execute these things, again, it'll become easier, quicker, and faster over time, and it'll become second nature to you. Whenever you start to play a sport, whenever you start practicing a new activity or hobby, you get better over time, and it becomes simpler, more fun, and easier to identify these setups. Now, granted, this is not for fun, and ultimately, yes, the goal is for this to change your life monetarily, because again, trading stocks really can give you the freedom that you want, but it does require a lot of work, and that's what I'm saying here. See you next time.